And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon-to-be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. And if you've not yet done so, please subscribe to both our YouTube channel and to the podcast. So I'm writing this as markets have had quite a nice run from November, December, sort of a Santa Claus rally, as they like to say, end of the year rally. And I'm reminded of those who always wait for the stock market to crash. They will only be happy if the stock market crashes. I came across a really interesting article by Ben Carson of Ritholtz Wealth Management, and he quoted famous investor Henry Blodgett, who had a quote about a man by the name of John Hussman, who is sort of like a notorious stock market bear, meaning he always thinks that the market is overvalued. He always thinks the market's going to drop. And he says, Blodgett says, every historical indicator Hussman is looking at is suggesting the stock market is wildly overvalued and headed for a period of lousy returns. How lousy? John Hussman thinks there's a good chance the stock market will soon crash 40 to 50%. And even if the market doesn't crash, Hussman thinks stocks are priced to produce returns only of a couple of percentage points per year over the next decade, far below the 7% inflation-adjusted long-term return that everyone is used to, and double-digit returns in the last few years. If you want to feel comfortable and happy, go ahead and ridicule John Hussman with everybody else. If you want to prepare yourself for what seems like a likely possible stock market future, however, read on. Sounds scary, right? You know when it was written? He wrote this in 2013. Okay, well, what happened from 2013 until now? The market dropped a couple of times and never got to a 40 or 50% drop, but it dropped 35% during Corona, 2022, the high 20s. So the market dropped, but you know what? In the same decade that Hussman was talking about, the S&P 500 moved up over 230%, which comes out to 12.8% annually. Okay, so was he right? Just missed a bit, right? A couple of percentage points a year, he says. You know what? We see, why do I bring this out? I don't even know who Hussman is. I don't care. Okay, there are always people who are predicting doom and gloom. Why? Maybe they get clicks. You know why? Because ultimately, I don't want to be cynical, but because if they happen to be right once in calling the down a big market downturn or a crash, then they become famous. Nobody remembers, although Blodgett pulls it out. Call it great job by him by pointing this out, right? But nobody remembers the bad calls that analysts make or prognosticators make, right? But if they hit it big on something which is sort of counter trend, right? Let's just say that generally over time markets move up and you actually go the opposite way and you say, well, things are going to crash, and you keep calling that. Well, one time you might get right, and then you become famous, right? Which means you can raise money, which means you're going to be on TV, which means ultimately you're going to make some money. But for investors, that's really dangerous because you're leaving so much potential money on the table. Yes, markets drop, but even if they crash, they don't crash forever, right? Not the end of the world. Things turn around and things get better. Like I say, in the last 4 years, the market's dropped significantly twice, right? But okay, so we don't even remember it. Nobody even remembers the market crash dropped significantly. I don't like using the word crash. I don't even know what it means when it crashed, but in 6 weeks or 5 weeks, it lost a third of its value. That's pretty significant, right? Nobody even remembers that. And it wasn't like 30 years ago that happened. That happened like last week, almost, right? A couple of years ago. So what's the point? The point is we learn time and time again that trying to time the market is fool's play, right? You're just never going to get it right. Whatever you listen to, oh, the economy stinks, the economy's good, interest rates go up, interest rates go down. Nobody knows what's going to happen. But over time, right, markets tend to go up. Now, past performance is no indicator of future returns. Let me put that in there for all of those who want to hear that disclaimer. But over time, right, investing in the stock market historically has produced really good returns. And even within that, markets have dropped. I recommend strongly tuning out the financial media, okay? Carson goes on to say, we've had 40 and 50% crashes, but it's pretty rare, right? You don't spend all that much time there as an investor. Sometimes you're gonna get your face ripped off in the markets and learn to live with it, but you shouldn't expect it to happen all the time. The market has been in a bear market, which is defined as a 20% drop or more, nearly 17% of the time. That's more than double the amount of time we spend at new all-time highs for the past 75 years or so. That's fascinating, right? We're only at new highs like 8 or 9% of the time, and we're in bear markets 17% of the time, but markets go up, right? So that's fascinating. And what's that mean? I mean, just don't fret it. Just keep investing, keep adding to your investments. Over time, things are going to work out great. It's a great way to make money. And I know it's hard, right? Even professionals like me, we get caught up in it sometimes, but it just doesn't pay, right? Just go in and invest right now. What's important is that you allocate the money as per your goals and per your needs, right? You don't want to be somebody who needs to generate fixed income in order to supplement their income because you don't have very much pension, you don't have any Social Security or whatever, right? You're not going to be investing in the latest AI stocks, right? You want to make sure that your portfolio is allocated in line with your goals and your needs. You don't want to take on more risk than you're able to handle. Okay, you don't want to go beyond, if you're retired, you might draw some red lines in the sand and say, well, my portfolio can't drop below a certain level. So because of that, I only should have 40, 50, 60% of my money allocated or linked to the stock market, right? It doesn't mean that you have to be 100% in, right? It also has to do with whether you sleep well at night or not, right? You might want to take your foot off the accelerator a little bit because the volatility of the market might be too much for you. Okay, that's also important. Your health is worth more than another couple bucks, clearly. But you have to understand that markets go down. They can go down sharply. But again, you're not investing in the stock market from today to tomorrow. If you are, it's not the right thing to invest in, right? It has to be considered a long-term investment. But if you're committed over the long term to ride the roller coaster, you're going to do just fine, right? He continues on, Carson. And he says, more than 3% of the time, returns have been negative over 10-year time frames. Annual returns have been 5% of worse 14% of the time. That's not great. However, annual returns have been 10% or higher 55% of the time. Annual returns of 8% or more have occurred nearly 70% of all rolling 10-year windows since 1950, right? Which means that good chance that if you just stay the course over time, you're going to do just fine. Okay, so forget about all of those out there who just like spreading gloom, doom and gloom, right? Ultimately, they don't make any money. They're waiting. They've been waiting. Husband's been waiting. He's been waiting for 10 years. He's, thought we're going to drop by 50%. He thought we're going to make 2% a year. Well, voila. Right? We made a heck of a lot more money than that. And he's still out there, still trumpeting, well, the market's overvalued. The market's overvalued. You know what? It might be overvalued. I have no idea. Nobody knows. Okay? So, because nobody knows, but we do trust the process that over time, things tend to appreciate in this business. So, do yourself a favor. If you're investing in stocks, and again, according to your goals, according to your needs, remembering that what happened in the past is no indication of what's going to be in the future. That's important, right? We don't know what's going to be in the future, but if we can learn from history, those who are in the market, not those who time the market, those who are in the market tend to be rewarded pretty well. Okay? You've been tuning into the Aaron Katzman Show. We speak about your life, your money, and your investments. Please subscribe to our YouTube channel. Please subscribe to the podcast if you've not yet done so. Thanks so much for tuning in, and we'll speak to you soon.